There's a way for Canadians to hold Bitcoin and pay zero tax on the gains. Completely legal, fully approved by the government. And most people scrolling past it have no idea it exists. But there's one catch that trips almost everyone up. And if you get it wrong, you lose the tax break entirely. I'll show you exactly how it works. I'm your crypto compass. Let's get your bearings. By the end of this video, you'll know exactly which accounts let you hold Bitcoin tax-free in Canada. Why? You can't just drop your coins from a wallet into one of them, and how some Canadians are paying $0 in commission while others pay $10 every single trade at their bank. Stick around, because the one catch I mentioned is the single most common mistake I see beginners make. Let's start with the account at the center of all this, the TFSA, the tax-free savings account. Almost every adult in Canada is eligible, and here's the magic of it. Any growth inside a TFSA is never taxed. Not when it grows, not when you take it out. If you put money in and it doubles, that gain is yours. The CRA doesn't touch it. Now normally, when you sell Bitcoin at a profit in a regular account, half of that gain is taxable as a capital gain. Inside a TFSA, that tax disappears. So the obvious question is, can I just put my Bitcoin in a TFSA? And that's where the catch comes in. Here's the thing most beginners get wrong, and it's exactly why I told you to stick around. You cannot take Bitcoin you already own in a wallet or on an exchange and move it into a TFSA. The rules simply don't allow raw crypto inside the account. So, how are people doing it legally? That's what I'll show you next. The reason is simple. A TFSA can only hold qualified investments, things like stocks, ETFs, and funds that trade on a recognized exchange. Raw Bitcoin held in a self-custody wallet is not on that list. So if you try to transfer coins from your ledger or your exchange account straight into a TFSA, it doesn't work. There's no button for it. And no Canadian platform will let you because it would break the account's rules. But, and this is the part that changes everything, Canada approved a workaround back in 2021 that is now completely mainstream, the Spot Bitcoin ETF. An ETF is a fund that holds the actual Bitcoin for you and trades on the Toronto Stock Exchange like a regular stock. And because it's a stock exchange listed fund, it absolutely qualifies for a TFSA. So, you don't hold the coin directly. You hold a fund that holds the coin. Same Bitcoin exposure, fully inside your tax-free account. In the next section, I'll name the actual funds and show you the second mistake, the one that quietly costs people money every time they buy. Canada has several spot crypto ETFs trading right on the TSX. The well-known Bitcoin ones include Purpose's BTCC and Fidelity's FBTC, and there are Ethereum versions too, like Purpose's ETH-HEX. These trade in Canadian dollars in your TFSA just like buying a share of any company. Now, here's the fee trap. Where you buy the ETF matters enormously. Some Canadian platforms, Wealthsimple is the standout. Savely, market showcase with an E and ending those tilly, do, timing, time. Buy that exact same ETF through a traditional big bank brokerage and you can pay anywhere from $6.95 to $9.99 every single buy. And again, when you sell. And notice the timing here. As I'm recording, the market's in extreme fear, Bitcoin's been grinding near 20-month lows, and money's been flowing out of these funds. That doesn't tell you to buy or sell. I'm not here to give you that call, but it does mean the difference between a zero-commission platform and a $10 a trade bank adds up fast if you're someone who buys a little at a time. There's also a separate smaller annual fee inside every ETF called the management fee. That's the fund company's cut, and it's unavoidable no matter where you buy. The commission, though, is completely in your control based on which platform you choose. That's the lever beginners miss. If this is clearing things up for you, hitting subscribe means you'll catch the next one. I break down Canadian crypto, taxes, and platforms every single week, in plain language, no hype. So here's the simple path. Open or use a TFSA on a platform that sells TSX-listed crypto ETFs at low or zero commission. Buy a fund like BTCC or FBTC, and your gains grow tax-free. No wallet transfers, no crypto tax headache at filing time, because ETF gains inside a TFSA simply aren't reported as taxable. But two honest limits you need to know. First, a TFSA has an annual contribution room. You can't put in unlimited amounts, and over-contributing triggers a penalty from the CRA, so check your room before you fund it. Second, you're getting Bitcoin's price exposure, not the coin itself. You can't send an ETF to someone, you can't spend it, and you don't hold your own keys. For a lot of Canadians who just want long-term tax-free exposure without managing a wallet, that trade-off is exactly what they want. For others who want true self-custody, raw Bitcoin in a wallet is the route. Just know that one comes with the regular tax rules. So that's the payoff I promised at the start. Canada really does let you hold Bitcoin completely tax-free. Not by putting coins in the account, but by holding a government-approved ETF that holds the Bitcoin for you inside a TFSA. Ideally, on a platform charging you zero commission. The catch that trips people up is thinking they can move raw coins in. They can't. But the ETF route gets them the same exposure, legally and tax-free. If that was useful, do two quick things. Hit subscribe and turn on the bell so you don't miss the next one. Next up, I'd watch my breakdown of what the CRA can actually see about your crypto in 2026. It pairs perfectly with this one. And tell me in the comments, are you team self-custody wallet or team tax-free ETF? Drop it below. I read them.